Okay, I'm going to explain question 8 of income statement and balance sheet. Okay, so for adjustment number 1, it says that a sales invoice has been omitted. Okay, the word sales invoice, okay, invoice is the purpose given for the purpose of credit sales. Okay, hence what they are saying is that these two accounts were not adjusted. Okay, the business should have debited trade receivables, credit sales revenue of $3,400. Okay, but they did not record it. Okay, hence our job is to adjust for these two values, which is trade receivables up here, okay, and sales revenue here, okay, plus 3400. Okay, the next one, they said that the correct entry had been made in the cost of sales account. Hence, it means that this journal entry, debit cost of sales credit inventory, has been recorded. Okay, and I do not need to adjust for all the values, any of the values above for cost of sales and inventory. Next adjustment, debtor owing $850 were unlikely to pay. Okay, whenever you see the word unlikely to pay, it means that they have to create allowance for impairment of trade receivables, 850. Okay, as you can see above, right, there's no allowance account. Okay, no allowance account. Hence, you have to create an allowance account, 850, and impairment loss, 850. Okay, impairment loss is an expense. Okay, while allowance for impairment loss, this is a contra asset. Okay, next one, insurance was prepaid $800. Okay, when I say prepaid, it means that I paid in advance. Therefore, okay, I paid in advance for next year. Hence, I should take out and subtract 800. Okay, and I have a prepaid insurance of $800. Next adjustment, interest on the loan was outstanding. The loan was taken out on 1st April. Okay, there's a reason why they actually gave you a date, 1st April. Okay, and I want you to keep in mind when you're doing a question later. Okay, so interest on the loan was outstanding. The word outstanding means accrued, okay, or owing. My year ends on 30th June. Okay, given in the question, my year ends on 30th June. I took out this loan on 1st April. Okay, hence if you count from April to June, April, May, June is actually 3 months. They took the loan for 3 months. Okay, therefore, I have to prorate interest. Okay, how do I prorate it? Okay, we take the percentage, which is 8%. Okay, it's given in the question that my interest rate is 8%. Okay, this is my interest rate. Okay, multiply by the principal amount, which is $9,000. Okay, this is the principal amount, times 3 months out of 12 months in a year. Okay, because I only took the loan for 3 months. Okay, therefore I have to prorate interest. This is the part where I prorate it. Okay, therefore my interest expense is $180. Okay, also remember to have an account called accrued interest, 180. Okay, remember that for every additional information, I need to do 2 adjustments. So for this adjustment, it will be interest expense, 180, accrued interest, 180. Depreciation policy is motor vehicles, 20% per annum using reducing balance method. Okay, reducing balance method is percentage times net book value, okay, which is 20% times my cost of my motor vehicles given in the question is 110,000, okay, minus accumulated depreciation of motor vehicles, 21,000. Okay, I get this value. Okay, this is a expense. Okay, many of you forgot to include depreciation in the income statement. Okay, can you please remind yourself and drill in your brain, right, that depreciation, okay, this is an expense in my income statement. Okay, and same thing, every additional information, okay, we have 2 adjustments. So I have an expense, which is depreciation, and my overall accumulated depreciation will also go up. Okay, because the word accumulated means total depreciation over the years. Okay, therefore, in that year, my depreciation of motor vehicles is 17,800. My total depreciation over the years will go up by 17,800. Okay, so two adjustments, depreciation and accumulated depreciation. Same thing, for fixtures and fittings, my depreciation is on straight line. So it's 15% times cost. Okay, this is straight line method. I have $35,500 as my cost. Okay, giving us depreciation expense of 5325. Okay, so repeat again. Every additional information, we have to do two adjustments. Adjustment for this will be depreciation, which is expense, and we also have to add the total accumulated depreciation over the years. Okay, so my expense will go up by 5325. My total depreciation, okay, accumulated depreciation, will also go up by 5325. Okay, so this is our adjustments. Okay, look at how I actually had a good practice, okay, to label down all the adjustments. So adjust additional information number 1. Okay, look at how I adjusted number 1 and number 1. Okay, additional information number 2. Okay, 2. Additional information number 3, I adjusted here, insurance expense and also prepaid insurance. Additional information number 4, okay, I adjusted for interest expense and accrued interest. Okay, same thing goes for adjustment number additional information number 5. I adjusted for depreciation and accumulated depreciation. Depreciation and accumulated depreciation. Okay, I find that by labeling down the adjustments at the side, right, you will actually prevent yourself from making careless mistakes, because some of you actually adjusted, okay, but you forgot to include all these in your balance sheet and income statement. Okay, one thing I would like to highlight, when you do your income statement and balance sheet, okay, this is a copy of the answers for your balance sheet. You need to show the format as such, which is trade receivables less allowance to give my net trade receivables. I need to see the word net trade receivables. Okay, and remember to write the word less allowance, okay, with a bracket. Okay, so these 3 lines, okay, these 3 rows must come together under my current assets. I cannot see them, okay, separate and jumbled out. It must come together as one section. Okay, so the section will be presented like that. Trade receivables, less allowance, net trade receivables. Okay.